So this is the S&P 500 chart. And for those of you that are brand new and have never seen our charts, it probably looks like a bunch of spaghetti to you. But those of you that do understand our charts know that this has just amazing, valuable information. Just a quick primer on what I do. On the bottom over here are cycle brackets. This is a drawing tool. What this does is just give us the sense of the energetic movements in the market. That's the money flow. That's really what gives it its energy. And then we add in our momentum indicators and all of the information that comes out of the multiple time frames of cycle analysis to be able to understand the market and do projections. So what we have right over here, as you can see, is a rising cycle and a declining phase to that cycle. And you can see right here, that was the ideal. And this is how it resolved. So right up on here are the actual cycle lines, and these are the ideal. Same thing right in here that you could see as it bottomed right here where both of these energetic cycle, the energetic movement in the cycle was down, and here's where it rallied and got nowhere. We call this a left-hand translation, and then completed the cycle almost spot on time. You can see that. This cycle right over here, as you can see, these two were negative. This was extremely positive, and we talked about what we call a swamping going on. So let me take a closer look right over here, and you can see that this last cycle, this cycle right in here, couldn't even correct. While these things were coming down, these energetic motions, the upward momentum is illustrated here as you look at the slim ribbon, which is our really great momentum indicator, was moving up, and it wouldn't allow this decline. Also, you can see on the bottom, the slim ribbon PO. This is green, and that arrow says upward momentum resumption, and you can see it moved up as we expected. It got over the big 50% retracement and up close to that 61.8%. I'll show you the Nasdaq, which was much weaker. But then after this rally, it came down and tested this low and then broke it. That is very negative. Now, if you saw our analysis the last couple of weeks on the intermediate term, we talked about the likelihood of it getting down near 3,900. Well, there's a low at 3,903 on Thursday. So it followed that perfectly. Here, these are the minor cycles right in here. As you can see, this one right here and this one right here. And here is the low area where we would expect to get that low, the minor bounce that comes right in here, and then potentially get up into these sell zones or resistance areas. And you can see in here today, it tried to rally, it was up 47 points, and now it's coming off up about 20. There is still a lot of energy to the downside in here. The slim ribbon PO is red. The slim ribbon is negatively configured in here, and that's going to prevent upside moves from being able to hold. If it can stretch out on some big upside day, it probably can get up to the 40-60 area. This is 41.13, and I don't think that's likely. It can get that high, though pattern-wise it really could. And what we expect is that, well, this is probably this minor low, but it could come down and take it out one day early in the week and then begin to move up as we get into this bounce. But there is a ton of risk in here. Our original analysis had a best case of it coming down here and testing this low at 36.36. You can see that red line right over there. We had upgraded it and said, well, because this was so strong originally, maybe it gets down to the 61.8 holds. But now it got there really early, and that is not likely anymore. It's more likely to get a rally to this area up here, maybe 40.60, and then get into this period of risk. So we're going to look for very low odds that it rallies and only tests 3,900, and very high odds that it comes in here and fails and sells off and tests 36.36 or lower. This is a very risky period in here as you get out to the end of September. The harmonic family syncs with weekly troughs, in other words, on the weekly charts in late September, which is this right here, and in late October, which is this next cycle out over here. So we don't know for sure whether this is going to be the big downside move or it comes out over here, but there is a ton of risk right in this period right here. This is our projection for this coming several weeks, and that is attempted rally up into this area, which may or may not have started, probably rally towards the end of next week or into even the following week, and then very hard selling potential coming out of there from mid-September to late September, where you could get some very serious declines during that period. I'm going to show you the NDX, which is basically the same analysis, except that it is weaker, and I'll show you why. And here is that analysis on the NDX, and that is, again, the same thing, but the same thing as far as you look at these negative cycle patterns in here, negative cycle, a positive cycle moving to a high, and then a failure. That failure right over there in those harmonics says that once it got under that low, which was 12,945, that it had turned negative, and you can see it fell right into this time frame right over there and tried to rally and now is failing today, and there is a lot of risk that this low will not hold in these next couple days, and then you get the move up in here and then a very big downside. Again, this lines up with late September. It says mid, but it's late September, and then the next one over here, late October. So that is just a huge risk. We'll look for maybe taking out this low, maybe not, trying to get up into this area, and then a big decline out over there, and very likely getting down here to this low at around 11,000 that it made way back over here on June 16th. So that is very likely that that's going to get taken out, and that's only 1,300 points on the downside on here. And by the way this market is trading, that could come pretty quickly. So a lot of risk, momentum here, as you can see, negative on the slim ribbon, PO on the bottom. What does positive momentum mean? Well, it means the market's going to go up, and negative momentum, let's go way back over here. Look at these signals over here. As I told you, the market was going down here in January and February, and when the market turned positive right over here, it was giving you these green and upward indicators, and now it looks like, you know, it's red, and if it got up at all in here, it's going to give you a downward signal again. So we're looking for that failure in there in the Nasdaq, and that's a look at what the daily chart looks like under very negative conditions. I'm going to switch over for a second and show you another chart. These are 2-hour charts, and our members get to see our 2-hour charts, and you can see in here how important 2-hour charts is. If you are a short-term trader or intraday trader, when the momentum is green on the 2-hour charts, you bias your trading to the long side. When the momentum is red or negative, you bias your trading to the upside here. I don't know if I said upside or downside, and downside here. You can see how the slim ribbon in here gives you the negative resistances, as it's doing right here this morning, and failing from there here on Friday. So when it's in this condition, you want to bias your positions to the downside. That means bigger short side trades and more often short side trades, or maybe never long side trades. And when it's green, then you do it to the long side, because these tell you where you can get the biggest impulses. And to be a successful trader, you need to catch those big impulses. So these are 2-hour charts on the S&P 500, the Russell, the Nasdaq, and the Dow. Notice here that the earliest downward turn was on the Russell, so that gives you some indication of how you can get some sense around the market was peaking in there. And now, of course, we have quite negative conditions looking at these 2-hour charts. Again, here is the daily chart on the Nasdaq, which says rallies will continue to fail, and there is